Waterfall income class is back at its normal schedule. We're going to resume class at 11:30 a.m. Eastern time, and also running a 2-day workshop this week, Monday and Tuesday, 1 p.m. Eastern time for waterfall income. So if I've got some current members, come on in. Instead of the 12:30 p.m. Eastern time, we're going back to 11:30 so we can get those trades fired off by noon. And then masterclass today at 1 and Tuesday at 1 p.m. Daily profit play today, macro Monday. Let's take a look at the news for the week. Letting the market kind of digest the jobs over the weekend. Clearly, it's a sign of the labor market slowing. That's really what it means. Does the market care that much? As I said last week, the market cares when it actually does. I think that the market, in order for it to care, is going to have to take out last week's low at 63.60. So coming into today's price action, VIX is at 1543. We are looking at futures market up about 0.2%. So let's go SPY for a moment. SPY up about $1.40. So about 0.22%. So if we open up .22 higher, that puts us up around 64.95. I'm hoping that price does not come back into the 25s or 30s today. I do have some broken butterflies that I want to see some profit on. Just like last week, we had some nice winners on Friday, and I've got a couple more that expire today. So hopefully these will cooperate. Call levels 65, 6500, or 6500, 6510, 6520. News for the week, like I said, all eyes likely on PPI, CPI data. It actually is a pretty slow start to the week. All low impact news to kick things off. Producer price index on Wednesday and CPI on Thursday. Now, what I find interesting is looking at the forecast. Previous year over year CPI 2.7 for the yearly. That's the headline CPI that everyone's watching. Do we run up for the week until we have the reality of higher producer price index and higher inflation? Does this make the market, nervous once again? I'm telling you, the price action that really matters is we have to take out last week's low. If we don't take out this low, this market has yet to care about, any type of dramatic bearish price action that's going to do some work to the downside. Okay. All right. Who's in the house this morning? Dan, good morning. Tom, good morning. Chuck and Mark. Larry, good morning. Snapper, good morning. Donna, Catherine, John. Good morning. Good morning. Hey, Greg. Hey, Bill. What's up, Dave? Vladimir, good morning. Andy, good morning. Nice to see everybody. Okay, let's get some highs and lows calculated. 64.81 VIX at 15.43. 1543. So 0.96. Around 65.40. Okay, so 65.40, 65.45 potential top if we're going to run to the VIX level. If VIX spikes up today or goes elevated, then we're probably going to be falling. But we're opening up a little bit pre-market, probably chewing into some of the inefficiency that happened post non-farm yesterday. Futures ran up all morning. We broke all-time highs once again. The market didn't finish there. We finished like down 0.3, 0.4% last week. Here's SPX down 0.3 from Friday's close. The Qs were actually up on Friday. The Dow was down almost 0.5%, and Russell somehow 0.5%. So mixed bag for the U.S. markets last week on Friday, with a bit of a tumble through non-farm payroll or post non-farm. Okay, 15.43. Let's do that. 0.96. $64.20. Okay. So ranging this bad boy out. Get some real levels in here as well. Okay. So up here to pre-market gamma levels, we have the 6,500, 6,520. That's it. I want to make sure like once we hit live market that these are filling up to the upside, or we'll start to see these fill up to the downside. There is a gamma flip zone around 64.70. So if we fail, to break out these highs, if we fail to, breach 65.20, looking for the downside. If we are up higher towards 64.90 and change, expect to move on the day is probably a plus minus 25. Yep. Okay. 25. That's what I'm showing here. We'll see what this adjusts to when the market opens. But if we open around 95, do we stay 25 points plus or minus? We'll find out. Okay. So I'm going to get maybe a little bit more aggressive this morning. I do have some bear call spreads. These are running. Let's get this one down here. Also nice to see another fresh high in the portfolio. There's no complaints there. That's actually it's a big push. What is going on in P&L? Oh, Baidu took a big rip. Okay. Baidu's up over $100. There we go. We must have a big pre-market on Baidu or something. I'd say, extremely patient on this stock for a while. 109 pre-market. Wow, that's a big jump. Yeah, it's $7 a share. So the nice thing is I don't have anything covered on Baidu, which is good because I feel like this stock goes somewhere and then comes right back down. And that's going to be the question I'll be asking by the end of the week. So we had a nice run on Baidu. I've got some puts, some ratio spreads, some credit spreads, and it's finally starting to break out over the last 8 months. We haven't seen a breach above this 105 handle. Now we're up to 109. So if we can stay here, I've got some measure moves. I'm trying to hold Baidu all the way back up towards the 2022 highs up in the 150s. So this might be a while away, but we're at least starting to make some progress. If we can hold these runs above like 105, I'd love to see this thing get back to 115, start to go back into the 120s. And as you can tell, when it wants to run, it can run pretty aggressively. So something like that, put on another move, and maybe we're talking 150 to 155. I'll gladly take some profit up there. Break even on this is like down in the 70s. I've had this thing for a while. I've done a lot of option trading to lower my cost basis. So if I can enjoy the ride, I will try my best. But not bad to have, last week gold and silver pushed my portfolio to fresh highs for the year. Today it looks like Baidu is pushing to fresh highs for the year. That's a big chunk of, that's a huge chunk of P&L. Having a $7-8 move higher. So that makes things pretty exciting. Levels for SPX. SPX. So 65.30 and 65.50. So as long as these are for the broken wing butterflies that I have for daily profit play, 65.30 and 65.50, as long as price is below those levels, then I've got some good looking profit today. I have a 2 contract trade at the 65.50, and I have a 1 contract trade at the 65.30. So it should be $100 at the 65.30, another $100 at the 65.50. Hopefully those are nice winners. Sean, enter new position of Baidu. I wouldn't just jump in and buy the thing at 109. I'm just speaking personally here. If it was me and I saw this thing going to 109, my style is to always think about what can I do with an option trade. I don't want to buy the high. If you put in a small allocation, i.e., okay, I like Baidu. Am I willing to spend, $10,000 in order to allocate for 100 shares? If that's not the case, then maybe dollar cost averaging. Put in $1,000, it pulls back, put in $1,000, pulls back into this level, put in $1,000, dollar cost average into it, and then see if this thing wants to run. But don't overstretch and buy a ton and just, you know, step into the highs and maybe it doesn't go that way. Okay. So if I could do a couple of the things is I don't mind dollar cost averaging into these recent levels and these breakouts, but I would prefer obviously that we just sell puts. If I just sold a put at 80, that's not a bad trade. If there's any premium here going out to like end of the year, going out to maybe Q1, Q2 next year, give it some time. But you can see that the 80 zone is very, very supportive. So let's see what that looks like. So if I went out to, let's say, summer of next year, could I go down to $80 and actually get a put? That's actually a pretty good trade. So I might actually throw this in for my project options edge and do a ratio spread. If I did an 80 by 75, that's a little income trade for $166. That's all it is at this point. Like if I take assignment, I'd own the shares at $68.34, which is way cheaper than the support. The support is 74, and I could own the shares at 68. Okay, if I move to up a strike, my break even would be 80 minus 5 minus 247. That's to me a little bit better income trade. Get a little bit more, about $250 for the trade itself. If I took any assignment, 80 minus 5, I'd own the shares at 72.53, which is still down below these lows. And this low is, 73. So owning it here with these pretty strong technical support zones, that's the way I do it, as opposed to just chase it. For literally the entire year, this thing has been sideways, and we're finally pre-market up to 109. I'm not even sure why, honestly. Earnings were good, but what's the big news? On notes issuing plan. Okay. I've just been holding this thing knowing that technically this thing should be in the 150s, knowing that fundamentally it does have some pretty strong, fundamental outlooks, but I know that nobody trusts the data out of China. This is the fundamentals, snowflake analysis, trading below estimated value, earnings are growing. It's not super overvalued. 9 times price to earnings for a tech company. Fair value 156. That's where I want to take this stock. I like the 150s. I see it on the charts. This low, this high. I'm happy there. If this is, and what's silly is if this is a double bottom, this is a low, and we get back to the center high, well, clearly that's a fantastic target. Okay. If we break above that, the stock doubles. So we go from, roughly 80, we'll say 75 to 150, and then take that up another $75. That would be the fulfillment of a double bottle pattern. So if you really want to ride this thing longer, there's a lot of upside potential. Recent highs all the way back into the 2018 zone, 2021 zone, but I don't think I'm going to hang on to it that long. If I get this trade right, I'm taking profit in the 145, 150 zone, and I'd be pretty happy. So, it's nice to see a stock like this getting somewhat excited. Let's have this conversation on Thursday, Friday to see, did it actually hold 109 by the end of the week? Every time I've seen this market go up, it's like, ooh, I'm up from, $80 to 105. It's right back down to $80 in a week or two. So this is why I wouldn't say just jump in and chase. That's the last thing I want to do in the stock. Now, having some exposure to it, sure. Dollar cost averaging into this area would make sense, because I do think the 80 is a strong support zone. You get your cost basis down into the mid 70s or low 70s. There's plenty of upside potential. But I would hate to have all my position in at 109 and watch this thing go 20, $30 against me. So I'm hopeful. I like the technicals, but it's just about positioning. And we'll see if it wants to make a nice directional run to the upside. Okay. Raw butterfly spread, sure. So the butterfly spreads we took last week, they're going to look like this. I have a price at 30 and 50. So 30 and 50 of that 35 was closed. The 40 was closed. Those are all profits from last week. So 30 and 50, I can delete that one and that one. 30 and 50 is what I'm watching. So the way these trades are going to work is it's essentially, we spent a lot of time in this. If anybody's new to this daily profit plan session, we spent a lot of time last week talking about, I just did like a bonus education piece on Friday. I think I still have those screenshots, or if I don't, I will share them. That's from Double Up class. I think I saved. There we go. So daily profit play page 1. So we listed all the stuff last week. If you're interested in learning, a lot of intricacies about the butterfly spread, you can join my Double Up service. If you're interested in, reviewing the class from last week on Friday, where I kind of sprinkled this in as a bonus session, watch the Friday recording. We did butterfly spreads, whether I'm going to be doing, I want price to go higher, I want price to go lower. The way that I trade these is I'm trying to put my butterfly spreads where I think the puck is going. I use the Gretzky quote, which is I'm trying to skate where the puck is going. So if I'm trying to make a bunch of money on these butterfly spreads, what I like about these trades is they're very low risk. The butterfly spread is very low risk. The broken wing butterfly is a little bit different. Okay, the broken wing is combining butterfly spread, broken wing butterfly. Here's a broken wing butterfly. This is what we have running for today. Okay, and those sheets are, Jim said it's in my Telegram channel. It is. I posted these screenshots in Telegram. I'll find it right here. Here you go. So daily profit plan anatomy, the trade lesson during today's session. That was Friday. A great 1 hour plus discussion on butterfly spreads, the call spread, the put spread, broken wing butterflies, and how we can use them. So that is on the playlist for youtube.com/financial wars on Friday. You'll see that under the daily profit plan playlist. And these images are what I'm reviewing right now. So as you're watching that session, I'm writing up these notes in real time, and now you have them as a reference point. So the trades that I'm in, right now, 65.50. As long as price stays below that, I'm going to make a dollar credit. I have another one in that's for 65.30. So as long as price stays less than 65.30 today, I've got my full credit. As long as it stays below 65.50, I've got my full credit. So the reason this trade works is it's a silly name. It can be confusing when you first think about it, but the reality is all this trade is combining a broken wing butterfly is combining a call, a debit spread. So like a bull call spread, which means I want price to go higher, and is combining that with a credit spread where I want price to go lower. And so that combination of strikes where they're both the same strike, that's why there's a profit trap on this trade. So I want the bull call spread, I want price to go up, and I want a bear call spread, I want price to go down. And it's the same strike. So at 65.30 today, as long as price stays below that, I have the max profit of my bull call spread, and I have the max profit of my bear call spread. And that pin price is the middle. Now, the reality is I still have credit on this trade before I take on any risk. So price would have to go above and close above 65.50 today for me to take on risk. Price would have to go above 65.30 today for me to take on risk. The nice thing about last week is we did have a pretty meaningful sell-off during non-farm. So when the market dropped hard, that helped position for today's position. Well, today's open. I was like, well, if we come back up and try to retest, as long as we're not exceeding these highs. So I could see us, high, low. I said this last week. If this breaks something like this, if it's high, low, little consolidation, do we break this structure? I think that this bull market is still very much intact until we break 63. 63.60. 63.60. We're actually going to experience a correction for the first time in months if we break below 63.60. Okay, it's still not that big of a correction. I mean, if the market were to pull back to 63.60, it's not that big of a correction. Okay, I mean, we're talking single digits. We're talking maybe 3%. I mean, my 50-period moving average, which I swear that we're going to hit it by the end of this month or by the end of October. we're going to hit this 50 period, which is at 63.25. So we should at least see that type of correction, right? That's over 3%. Now, what I keep wondering is this market going to continue to every time we have a high, pull back, have a high, pull back, have a high, pull back, have a high? Do we pull back again? Do we actually break this structure at all? If we do, then the market maybe has like a 1, 2, 3 to the downside. Previous all-time highs, lots of support, plenty of opportunity to be buying more dips in here. But everyone's so concerned that, oh my gosh, the labor market's so bad, it's going to put us into a recession. No, it's probably not. Okay. What it is, it's enough data that is stopping this ridiculous overbought condition train that we've seen for the last couple months. I've been very passive through July, not expecting August to do what it did. August went higher, higher, higher. We had one of the best Augusts on record. I think the last time we had an August this positive would have been back during COVID. And then September wiped away a lot of those gains. So I'm curious if this year's September is going to be a little bit different, where we're not red. Like September's still green. So right now, September's still green. And are we going to continue to hold this, or is this like, well, Fed's coming and it's been priced in, they're going to start cutting rates, everyone knows it, and that's the buy the room, sell the news, the market rolls over by the end of the month. Okay. And we just wonder to what degree. Are we rolling over for correction? Are we rolling over for something worse? I think it's correction. I think it's going to be volatile. I would expect volatility. You come into these sessions, I don't want anyone complaining like, Chris, why is the market down? What's it going to be down? Maybe 3%. If it's going to be something ugly, maybe 5 to 7%. If it gets really volatile, maybe 10%. I still think that's a buying opportunity. So, we have strategies to deploy to make sure that we can survive whatever this market throws at us. If we want to roll all the way back over to these April lows, I have hedges that are at 15 to 1, 20 to 1, and 40 to 1. That should pay really well. I don't want that to happen. I don't want my highs for the year to be saved by 40 to 1 hedges. I want the market to continue to do what the market does best, which is hopefully just try to grind higher. But I think this market needs a little technical pullback. It's a little surprising actually to have such reliable indicators like overbought conditions, relative strength, momentum oscillators, lots of divergence here, lots of divergence on the daily and the weekly time frame, and still it refuses to roll over. But timing is everything. Does it roll over today? Probably not. But if I'm comfortably calling like a 30 to 60 day window, I think we hit this line right here, which means we're at least going to have a 3% pullback from top to bottom. And I say at least because if we hit the 50, the 100 is right below it. So do we have, anything like 2024? This was a 10% correction. This was a 4 to 5% correction. This was 3 to 4%. This is 3 to 4%. This is 4 to 5%. This market can pull back. And what we've seen lately is it just doesn't want to. So that's why I'm highlighting these two levels. That level there is 63.60, 63.40. If we take out those two lows, then the bears have gained the upper hand as far as price action, just for that whatever correction we need. But if those highs continue to be, or those lows rather, are higher lows, then the market just doesn't care right now. But it will. It'll care eventually. And I think that's what's going to make, the news is going to be crazy and it's going to be more volatile. The VIX is going to spike up. We're probably going to see the VIX up into the high teens, maybe 20s again. We don't know. We'll find out. But futures market this morning, 0.24. So we are open up a little bit higher. We are 1 minute away from the open. So let's see what levels we can throw on today. I'd like to see a nice range trade. I mean, I know it's kind of dramatic after that was a very volatile, post non-farm on Friday. So we'll see if, we have like a contained price action day or if it's going to kind of blow things out of the water. But I'm hoping that just based on, gap higher, recentering maybe at 64.80. As long as I can sell high, I think we'll be okay. All right. So we just had the open. And price is underway. We're probably opening up around 95 or so. I'm waiting for price to pop up on my chart. So opening bell. Come on. Baidu 104 highs. Yes, chart alarm going off. Still waiting for price to pop up on my screen. There we go. 96. Okay. This is a cancel that trade. If this one gets filled, I do have a broken wing pending for today. 65.35 by 65.40 by 65.55. That's pending at $1, but it's only trading for like 1 cent right now. Okay, and then I've got a call condor running for waterfall. All right, let's see what we've got in the option chain for today. So delta wise, this seems a little high. These need to adjust. These deltas are way too high. So plus or minus 17 points, and this is telling me that I can go 25, 30 points out with a 20 delta. That can't be right. These are going to have to be smaller deltas. This expected move right on this red shaded zone, this should be right around a 20 delta. There we go. Now it's fixed. Okay. So I could do the 10 and 15. Gosh, it's just such a small plus or minus on the day. Could I do, I mean, highs last week, we breached 65.30. I've got the broken wings running. I mean, I've kind of already taken a few trades. I mean, I'm in 2 live trades right now with broken wings. So let me see. I don't want to get too aggressive. If I did the 15 by 20, if this trade fills for $1, that's not too bad. So I could do the 65, 15 by 20 and the 60 by 55. That's for $1.10. Let me see if I can get like $1. Let's see, maybe $1.50 on this iron condor. 65.15 by 20, 64.60 by 55. Let's see. I think I'm going to do this. I'm going to take the trade for maybe $1. See if I can get $1.15. So that's 15 delta, 16 delta. Those look pretty good. Let's see. I'm going to probably just follow these legs. See if I get $1.10. All right. So what I'm looking at here is I'm putting in a pending order for daily profit play. 65.15 is my sell call. I'm choosing a 5 wide trade, and then 60. The heck. That should be a 1 contract trade. Make sure that's correct. So if I go 15 by 20 and 60 by 55. Yeah, so you made $1.10 on this trade. Okay. So 65.15 sell call going 5 wide and 64.60 put going 5 wide. So that's where I'm going to sit right now. Just let this hang out. Maybe go down to 105 and then take a second contract if it looks a little bit better. So I've got Chipotle crossing $40, HDB crossing $40. Bonds, TLT crossing 89 for the first time in a while. Getting some bond bids here. Okay, all right. So daily profit play alerts. I'm going to post the alert right now. We do have 2 broken wing butterflies. So DPP update. I have 2 broken wing butterflies running for today's expiration. The pin prices are 65.35 and 65.50. Getting filled on an iron condor. Okay. New trade with standard DPP. So the 65.15. 64.60 put. 64.55 put. Got pulled in for $1.05 credit on that trade. All right, so it's in Telegram. Got filled for $1.10. Good. So I'm doing the 65.15 sell call, and I'm choose your width, but I'm not going more than five right now because I'm going to keep scaling in. So I like the 15 by 20, and then 64.60 is my sell put going 5 wide there. So we got filled for $1.10, great. $1.05, fine. $1.15, awesome. But it sounds like $1.10 seems reasonable. Okay. All right. So we got some new trades in. Broken Wing still running. 35, 50, and 30. All right, just let me double check here. So this is make sure this is the right trade. So 15 and 20, 60 and 55. So this gets grouped. There we go. And then 25, 30, and 45. That's a broken wing with the pin at 30. And then 45, 50, and 65 is the data. So I've got 3 broken wing butterflies running. So I've got 1 pin at 30, 2 pins at 50. Yeah, there's a lot going on. I kind of got a little aggressive last week, and I'm like, I think this market's got to top out a little bit. So hopefully price will respect those levels, and we'll see what we get. So I'll go here. So pulled in $1.05, and I'll look to close this one down. So $1.05. So anything at 75 cents would be a good close. So 75-cent debit or lower to close. So that's pending. Rob says, do you have a more in-depth class? Of course. My double up class is all about butterflies. So if you're interested in learning more about butterfly spreads, then double ups is probably the service for you. Daily prof play, we did the broken wings. That's a little bit different. You're taking on a bit more risk on those broken wings because it's a wider call spread. Okay. So what I'd say, Rob, here's what I want you to do. Go back and watch the class from Friday. It's in youtube.com/financial wars. So youtube.com/financial wars. Find my daily prof play playlist. So this is live right now. Let's go to live. Daily profit plan playlists. Here's daily profit plan with Chris Pulver. So if you click on this, we're live right now. Let me mute this. Sorry, I'm just going to mute that. Just go find the playlist. You want to find the session from Friday. Okay. So find the session from Friday. You can pull that and see the notes that were posted in Telegram right back here. Or maybe I skipped it. There we go. This was notes from Friday. We basically did anatomy of a trade strategy breakdown. We spent a 1 hour plus discussion on butterfly spreads. It's also, I had like 5 hours of master classes in my double up service for butterfly spreads. So if you want to know like game plan, low risk, high reward trades, double up is a great way to do it. Okay. All right. Good stuff. Okay, so daily profit play is in. I'm going to start updating the tracker. Um, Today is the 8th. Center price is around 64.95. I did the 65.15 and the 64.60 put. Got filled for $1.05. Okay, so that right now is 1, 2, 3, 4 open positions on daily profit play that will all close today. Hopefully that's closing up for 4 winners. Price wise on the day, resistance around 65.15, 65.20 zone. I think the market's capable of getting there. If I wanted to look at a double up trade, this is probably reasonable. If I went to today, can we get to 15? So right now, could I turn this trade? It's just showing it like wow, it's all over the place. I'm looking to see if this can trade for like a 30 cent debit. That's very gettable. I mean, on the upside of the expected move, 50% ATRs are on 65.15. I just don't want to pay an arm and a leg for it. So let me see if I can get in here for like 25-cent debit. So this would be a butterfly spread for double ups if I can get filled. The price is pretty crazy though. This is a bid, mid ask, and it's jumping all over the place, which is kind of rare for a SPX trade. But let me see what I can get filled at. So 25 cents. 25 debit not filling, 30 debit maybe. All right, I'm not going to take more than like a 35-cent debit on this thing. Yeah, the prices are a little wild. Well, that's annoying. All right, I'm going to cancel that trade for right now. Wow. 15 by 26. So you got $1.35, huh? Nice. I'm guessing with that fill, maybe it's when price was up here towards like 65.01. You might just have the credit jump up a little bit. But I don't see a lot of liquidity right now flowing towards like this positive negative gamma pivot point, which is around 64.70. I think most of the flows are just kind of hanging out like at price, maybe choppy here. This should be a pretty good daily profit play. Just a standard, sell the calls, sell the puts, get price to be pretty quiet and range bound. That could work out really nicely. So let me see what this trade is offering again. Now it's trading for $1.20. My call side, the delta's jumped up from like a 15 to now an 18. So that's why we're getting a slightly better fill is you got the call side with now a higher delta. But I'm just going to stick with the one trade for right now. I've got the broken wings. I got 3 broken wings for $250, and hopefully a daily profit play, standard daily profit play is going to work out for 30, 40, $50. Nice mark. Okay. I mean, that's a nice jump. 472 is a new high for the year. That is a nice jump. That would be year-to-date highs 472, a 9.8. I say that a lot of that's thanks to some Baidu love. Okay. I mean, so far price action is looking very cooperative. This is what we'd like to see. So we have, 5, 10, 15 minutes of indecision. We should have some price action working out our way. I'm trading around break even for my trade right now. I'm noticing that I'm getting some big jumps in these numbers. I mean, when I tried to do that little butterfly spread, I saw like 5 cents, 60 cents, 40 cents, 30 cents. This should be a little bit tighter. So credit spreads still remain pretty tight. There we go. We're starting to see some better profit now. So this trade should be showing some profit here momentarily. Um, this one's a little bit more confusing because I've got, multiple trades kind of stacked up on top of each other. So the tracker's this. I've got trade number 456, 457, and 458 all running, and they're all listed right here, but they're overlapped. So that's why I don't have them organized, because I kind of doubled up on some of the strikes. But I've got it organized. I know it's, one broken wing butterfly for $1, the other one for $1, the other one for 50 cents, and then today's iron condor for $1.05. Okay, waterfall still looking good. Class at 11:30. Right. So price action so far, and this is pretty good. We want to see just a chill 20, 30, 40 minutes of price action today. So the nice thing is once we're in these trades, we just kind of hang out and let them marinate. So what I want to see today is I don't want to see price making a run to 65.30. I mean, honestly, I don't want to see the price make the run to 65.15 or 20 either. So the way this kind of works out ideally would be we just stay here, pretty choppy I mean, the markets could certainly be calm after having a big Thursday and a big Friday. I could see today being very, very calm. Just a little bit of experience sprinkled in there. I could be wrong, but after having an excessive move on Thursday and also an excessive move on Friday, I could see Monday being very calm. Tomorrow probably being pretty calm because all the news comes on Wednesday and Thursday this week as the market's ready to digest some U.S. inflation news. Okay. So let's see. Yeah. So we're break even on this trade. I'm not going to double up on this thing. I'm just going to take the profit for what it is. So I've got it set for about a $30 to $40 winner right now. But if we can nail a winner on daily profit play early, like in the first, let's say 60 minutes of trading, then I've got the rest of the day to make sure that price stays below 65.30. If we stay below 65.30, great. We stay below 65.50, great. There's another $250 of winning. All right, so those trades are going on. I'd like to find some other stuff. So this is perfect. This is what we want to see for daily profit play for an intraday trade is just calm, relaxed, choppy price action. And we just want to see time work in our favor. So if we can get time to do that, like so, right now it's up about 11%. So we want to see this one jumping up into like a 25, 30% winner. And hopefully it does just that. VIX hasn't really done much. VIX at 1529. We had that big spike on Friday up to almost 17 and then reverted hard for the rest of the day. Not seeing a big spike on VIX. This was that run up into our low on Monday and then reverted the entire week, a little flush on Friday. VIX is still at 15. We'll keep an eye on it. Price action, I say the price action that really matters. I've got some chart alarms I'd like to take a look at here. Happy birthday, Mark. The big 6-0. Price action. If we take out to the downside, if we take out this low or this low, this is for the first time in months how the market's actually showing us that it cares about maybe a slowing job market, maybe potential stagflation. That is what the headline's going to be this week. I mean, if we look at the calendar, okay, let's go to the year-over-year CPI on Wednesday, Thursday this week. So I'm using Bloomberg Economic Calendar, go Thursday and Wednesday where we have the inflation data. So Wednesday, 8:30, here is your producer price index. So the year-over-year is what I'm looking for. Okay, so here's your batch of 8:30 news on Wednesday. And I'm interested in the core year-over-year, which was a previous at 3.7, and the headline year-over-year, which is 3.3. This doesn't print until Wednesday, but if we see this higher, what does this mean? This means that things are more expensive for businesses. Things are more expensive to be made, and how much of these like tariffs / increase in prices are going to be absorbed by the producers versus passed on to wholesalers, retailers, to then the consumer. More than likely, PMIs are on the rise, higher prices. We're probably going to see higher prices. Is it enough to break the market? It's not really the fact that it's increasing. It's more so the rate of increase. We had a huge jump in producer price index data last month, this month. So previous at 3.3, previous 3.7. Let's see what they print on Wednesday. More importantly, what's going to make the big headlines is going to be Thursday, and that is your headline CPI, again at 8:30 in the morning. So here's your batch for that. So here's all the data from 8:30 on Thursday, and headline CPI 2.7. It's forecasted this week to print at 2.9. Higher inflation. Okay. Here is your core CPI 3.1. There's not a forecast for the year-over-year. These two data points on Thursday will matter. This will start painting the narrative. Here's what I'm imagining. If we have headline inflation, which is this year-over-year CPI, if we print 2.9, or we print, honestly, I wouldn't be shocked if the numbers exactly on point at 2.9. It's like, look at how good they're forecasting. It's right at 2.9, but it's still higher than previous. You're going to start to see headlines that are representing stagflation. Okay. Why? Because we have slower job growth with higher inflation. That's stagflation. Now, the reality of stagflation is we're not firing people, right? So this whole idea of a recession, we're not firing people. Companies are still hanging on to their workers. Nobody wants to go back to like a pandemic scramble where all of a sudden there were no workers to fill these jobs. But there's certainly not a hiring boom right now. Companies are hanging on to workers, but nobody's really hiring. Okay. So anyway, point is, this is going to be the headline. If we print higher inflation this week, you're probably going to start seeing stagflation pop up. That's the concern. The Fed is cutting. The Fed's more accommodative. The fiscal side is really aggressive. I don't see that changing. So I really don't think the market. Look, I think we have a lot of volatility ahead. But I think the market's going to continue to plug away, try to focus on this growth agenda. And probably until midterms of next year, there's no major policy shift. So unless, unless Trump becomes more random with like more tariffs, more escalations, I think we just still have this resilient, positive gamma environment, which is every dip is bought and there might be suppressed volatility and the market's not really breaking any key levels, you know? So I still think the correction by September, October, we hit that 50-day moving average. We pull back to maybe 3 to 5% corrections. That might be it. I think on the excessive side, maybe a 10% dip. That is just a dip to be bought. But we're already sitting at like 8 to 10% for the year. S&P's up 8+%, Nasdaq's up 10+%. I think the market would be very happy to see if we can hold these levels, which makes me think I need to do what I can to position for those levels where if I get dips and pullbacks, I want to see if we can maintain these kind of current highs, as opposed to like, I think the market's going to 7,000. I mean, maybe it does, but I think if the market's at 10% for the year, piggybacking off of 20+% years, that's a really good third year, you know? So this is why waterfall income is such a good strategy to have in your toolkit, because we can be really, really flexible and forgiving on some of the strategies we deploy. I can give myself lots of margin for error and still plan on making, good consistent income week after week, regardless of the market. The market doesn't have to go up. We can still make money. Okay. All right. Good stuff. 35, 40, 55. Let's take a look at those. So broken wings should be looking fine. So I have a couple of them in here. So here, I'll show you. So I've got, if you have the broken wing, so I've got a dollar credit, and 50 cents credit on the broken wing butterflies. So here's one of them. So the 25, 30, and 45. So if I look to close this trade out, and this should be down to a 1. There. So this trade was filled for, I believe this is filled for $1, and it's offering now 5 cents. So I can close this trade and just take it off. Okay, so if I just go to filled, oh crap, it's not going to show it from last week. Let's go last 7 days. So this trade, 65.25 by 30 by, so right here, this trade that I'm showing you on my screen, it was filled for 50 cents Friday, and now it's trading for 5 cents. Okay, if I can close this for 5 cents, I'm going to take the winner. Let me see if I can close this thing for either a credit of 5 cents or close it out even for a 5-cent debit, take the 45 cents and move on. Let me see. All right, so I got out of that trade for 45 cents. So my 50-cent fill, which is trade number 458, I'm just exiting here for 5 cents. Okay, so now I'm left with a 242, which is the same as a broken wing butterfly 121. It's the same. I just did 2 contracts here. This one's worth $1. Group this with a broken wing butterfly. There we go. So there's my 242. This is up most of the profit. Make sure this is all correct. So 25, 35, 45. This should be good for trade number 5-cent debit. It's got some profit running on this one. 30. Let me check all these here. 35, 40, and 55 close out for 10 cents. $35, $40, and $55. Okay, so that one's good. Full profit. There we go. So this one, I'm just trying to make sure that I don't close this too early. This is a broken wing, 45 by 50 by 65. It's a 242. The structure is good, but I know that I didn't pull in 295 credit. I know that. So I'm a little reluctant to close this trade out. Now, it does show like a 98% chance of profit, 99.5% chance of profit. So I probably just want this one to settle. This one should be worth $200. It should have been $1 credit, but I've got two contracts in, so it should be worth $200. And then the standard daily profit play right here. Okay, we've got the waterfalls in. Those contracts are all right. These contracts are okay. So 45, 50. Okay. So trade number 456 on the tracker and trade number 457 on the tracker. $1 credit each. So far, these are looking good. I think I'm just going to let this one expire for full profit. If we start to get up into 65.15, 65.20 today, we'd have to break all-time highs for this one to be a threat. And if there is a threat, this one expires today. That does give me a profit trap. So this one, I don't really need to manage. I'm not going to manage this trade. This one should be like 99.5% probability to profit. It's going to stay there. I want this one to hold up and hit full profit today. This one, I'm up about 25%. I'm getting closer and closer to profit on the standard iron condor, so that's good. Price action today, again, pretty darn chill. So who's in a standard daily profit play today? I know Mark's in there. Dave's in there. There you go. Nice bill. Catherine's in there. Okay, good. Ed said 2 for 2. Very good. Going to Big Ben. Nice. John's in. Willard's in. Lynn's in. Bodine's in. Trying for 1. Okay. Ended $1 out of 85. Very nice. Randy's in at $1.15. In. Okay, good. So we're still managing. Price looks good. If I can hit like that 25 to 30% take profit, I'm happy with that for today. Price action is very cooperative. So my plan for the day is this. This will allow me to clean up all of my trades. So my 2 broken wing butterflies, I'll drag the tracker. The reason I'm struggling to drag this tracker is because of this Zoom menu. But this is what I have. So this trade is running. Okay. This one should be a full profit by the end of the day. This one should be a full profit by the end of the day. Now, there is still a profit trap in here, but in order to hit a profit trap, price is going to have to go much higher. We're going to have to see prices break last week's high by like 15 or 20 points, and then I have that profit trap. So the probability is here. I'm just going to keep the full dollar on these trades. So if I let it go all the way to expiration, I just keep the dollar. This trade will be entered in for $0 exit, which means I keep the full credit. But that trade's not closed yet. So I'm going to keep that running. This is the trade for this morning. So that $1.05, I'm hoping to exit at 70 cents. And that'd be a nice little 25 to 30% winner. Okay, so that's what we have running right now for daily profit play. Brett says in and out at 20%. Very nice. 20 wide at 260, Jim. Very good. Yeah, price is looking great, man. I mean, this is exactly what we want to see for daily profit play. Yep. That's perfect. Okay. So management wise, there's really not much that I have to do for the rest of the morning. I think I'm cleaning up some of the broken wings. They look pretty good. Let's see if we can just hit a winner on our daily profit play. So that would be this trade with the broker already has to take profit. So it's already up around 28%. My take profit has to be close. Let's go today. So working order is, I'm trading right around the mid price right now. So we've got the price shown as 77 cents, 79 cents. I need price to get probably to 75 or 70 and then get filled. So the nice thing is we've got some extra bonus time today for education, which is good. I wouldn't mind giving y'all a sneak peek. If you're interested in kind of this daily routine that we do for daily profit play, I'll show you my little indicator that I built. I'm doing a relaunch of daily profit play. It's been one of my biggest services. It's a little high on the education side, like right up front. But when we talk about this, I think I start this relaunch this week, and I'm going to spend a lot of extra bonus time, like lots of master classes, lots of live sessions, to make sure that a new cohort of students that comes in, all of my kind of OG daily profit play students can come on in and just reassure the new students, like, this is the place to be for consistent daily income, right? This is the class that I use where it's like, I'm trying to make money every day with daily profit play, and I don't just take one trade. Okay. Now I want to focus on one trade just to give you, here's the core strategy that we like to deploy. But we've put some tweaks in there. We put some core strategies through certain days of the week. Obviously, if we expect price to move, there's a nice little flip where we can go for a trade that gives us profits when we get a little bit of direction. Okay. So anyway, all this stuff is good. So I built out a little indicator, and hopefully while we're talking, I will have this trade, which is up about 28% right now, hopefully close out for that, credit. So I'm sitting around 80 cents right now. I need this to go down to about 75 cents and hit hopefully my winner. Price action today is so far so good. And I could not have asked for a better look to daily profit play. And like I said, Thursday was kind of an outlier day when the market was excessively bullish. Friday, we blew through the downside with the expected move as well. Today, it's like, we finally calmed down. So I'm sure that a lot of market maker hedging that was going on for Thursday and Friday, we're being pushed into like today being like way more of a neutral trade and a neutral day. And it seems to be the case. So that's good. All right. Let me do one thing here. I'm waiting to see if I get an email back from Tasty Trade today as well. Okay, so daily profit play. I'm going to bring up my workspace here that I built out last week. Okay, let me go into this indicator. So we're going 100 bars out using the VIX. Reference point is going to be previous close. Okay, and I'll go a little bit taller on the ATRs. There. Okay, so if you've been with me for the last couple of months, we're manually calculating out the VIX rule of 16 is something I've used for many years on, how far I expect the markets to be moving on a day-to-day basis. The last couple of years, especially because once we've had zero DTE, which has been every day, the SPX, the SPY, the QQQ, they have expirations every single day. This has been happening for 3 years now. So the VIX rule of 16 has been really helpful in allowing me to see that there's a high probability that we don't exceed this yellow box high or this yellow box low. Okay. So if I'm looking to contain price for the day, this yellow box, usually we start to see, number one, price rarely gets there. Number two, if we even get close to those levels, we start to see that price will reject or it will bounce. And the market makers will kind of use this area as a guardrail. Okay. On top of that, you can see I have a 50% ATR, 100% ATR, 150, and 200. Okay. Now that is just the average trading range over the last 5 days. But I put this indicator together for daily profit play because I want to make sure that if I'm selling calls up here and I'm selling puts down here, I want to make sure that I'm not putting them right in front of price. If I sell call here and I sell a put here, that's way too tight to price. But it's all based on volatility, right? When we have a lower VIX environment, the market only expects the S&P to move like 15 to 20 points a day. So I can't go 50 points higher and 50 points lower and actually get credit for that. Or I can, it's just like minimum credit. So anyway, I built the indicator like this. So for anybody that's in my daily profit play sessions, not the free ones, not the free ones. This is for my daily profit play alerts. If you're a member of my daily profit play service, okay, this indicator will be yours. So I know that we haven't officially built one. For the classroom, I did like a basic ATR indicator when I first launched this one. This one is a little bit more sophisticated, combining my daily ATRs with my VIX. And I think this is a better idea to get us a sense of, okay, if price is going to go up to a 50% or down to a 50%, a lot of times that's a good target for the day. Market satisfied hitting like a 50% ATR. Okay. If we go to a 100% ATR, usually we start to see the market respond off of those levels. And if we exceed that, Jackson Hole, if everyone was with me a few weeks ago with Jackson Hole on that Friday, the market went straight up and we nearly hit a 200% ATR. Now, as soon as we did that in about 30 minutes of trading, the rest of the day, the market did this for the rest of the day. So it is super, super, super uncommon to, number one, exceed 100%, let alone stretching towards 200%. So if you ever wanted to call the top or call the bottom, this indicator is a great way to do it, because we should not see prices exceeding this VIX, and we shouldn't see prices exceeding this 150 to 200% ATR. Okay. So I think this is just a helpful display. I'll talk about this more on a lot of master classes that are coming up these next weeks, like this week and next week, once I start doing this relaunch and we get more daily profit play students in. But my goal is I want to see price with guardrails every single day. So if market makers keep prices contained where they don't go higher and they don't go lower, we can make money every single day. And it doesn't matter if this is a low VIX environment or high VIX environment. It just means that we're selling premium. And our goal is we expect the expected move. Okay. EXP is for expected move to be greater than the actual move. And this is why selling premium has proven to be the market maker's best friend over the last 50 years. This is what they do. They sell the expected moves. They sell the outside of the expected moves. They sell the, 80 to 85% probability that price will stay in the expected move greater than the actual. In the cases, we will see that some days, and it does happen, the actual will exceed the expected. So if anybody's talking to you about market maker moves, MMM for market maker moves, if anybody's talking about that stuff, right now we're in a market maker environment where plus or minus maybe 20 points in the day. We have seen many days where the market's up over 20, down over 20, but it's how it closes. Okay. So if you see the price opens here and we have a plus or minus 20 on the day, price can go down 30 to 40 points, but it's going to likely close within that plus or minus 20. That makes sense? But we have to trust that, number one, our risk has to be on point. Number two, we've got to trust that market makers will allow us to side with them. They're not trying to make their job harder. Market makers, profits getting hit on SPX, by the way. So our daily profit play is good. That was 30 out of the 105. Oops, that should be like a 28% winner. So 28.5% winner, closed out for profit. Okay, so DPP update. Today's standard IC entry 105 credit, closed 75 debit. Nice winner. I have two broken wing butterflies running with the 65.50 pin price for $1 credit each. 99.5% probability profit. Likely let them expire for full profit end of day. Okay, so nice winner. What do we have here? Yep. So I will get this. This is all being updated. So I just finished this coding last week for TradingView. I'm getting this also put in a Thinkorswim, and I'm getting this in the Tasty platform as well. So if you're Thinkorswim, if you like to use Thinkorswim charts, if you like to use TradingView charts or Tasty Trade, I'm going to get this indicator in all those platforms. Okay. All right. But anyway, I just want to give you the overview. Like, if this is the indicator that you had, and I'm going to do some videos on this exact indicator, this indicator right here, all by itself, would give us the confidence to say we should not see price going higher than this yellow box or lower than this yellow box on a day-to-day basis. It shouldn't be going higher or lower. Okay. If it does, we have a guardrail at that 150 and a guardrail at that 200 because more than likely price is not going to exceed it. Is it 100% guaranteed? Of course it's not. No way. Okay. Because if there is an outlier type day where, oh my gosh, Chris, the market went up and it hit 160% ATR and it didn't go down. Okay. Well, guess what it's probably going to do the next day? Probably stay exactly the same or go down. And this is the trickiest part about zero DTE. Okay. Because last week, Thursday was a good example. Last week, Thursday, the market, when we started out trading here, I was selling a 64.75 and a 64.80 call. Those were like 10 deltas on the options chain. And the market proceeded to go all the way up above 6,500. That was probably like a 0 to 5 delta when we started trading for the day, which means there's only like a 5% chance that price does what it did on Thursday, but it still happened. So never, ever, ever, ever over risk and over leverage, because one day like that, if we lose, it's going to suck if you're trading too big. But one day that is just not a winner comes back and we win the next day and we win the next day. And I mean, the nice part is the losses I took on Thursday are already gone after today's wins. So if I win these two broken butterflies at the end of today, I am back up in the black. So I lost on Thursday, win on Friday, win on Monday, and I'm back in the black. It's all because I didn't over risk on Thursday. You know, I was accepting the risk. I hated the fact that I lost. It was annoying to see the day do what it did, but Friday cooperated, Monday cooperating. So far, so good. Okay. So I will keep saying it. Eventually you'll listen to me, but in a 0-day environment, risk management is the most important thing. Okay. A loss will happen. And what's nice is when a loss happens, if you're doing the right thing mechanically, a loss will happen because the market did something kind of silly that day. That's really what it is. I'm not saying that to give you an excuse every time, but if the market does something silly, it's usually going to right itself and correct itself and, you know, allow us to repair it by just continuing to trade, right? What we don't want to do is have one losing day and then we question the entire strategy and then we're paralyzed, we're frozen, we don't want to do anything because we don't want to lose again. So we have to keep trading. Right. And then you come to a day like today where everything is just super chill and super cooperative. This is what a normal market action kind of is, you know, but Thursday was a little wild and crazy. Friday was a little wild and crazy. Today is pretty calm, which is what we want. Do I ever martingale? No. I talked about that. I can show you all the trades for 3 years and I can show you why martingale is just going to be stupid. It still makes us more money. I mean, if I've never done the strategy with a full martingale. But over 3 years of data, the only time I've taken consecutive losses, I think the biggest losing streak we've had in over 3 years of trading would be 2 losses in a row. So, I mean, the martingale, again, it's all about risk because what's to stop us from having that third loss in a row? You know, if I go from a one contract trade, let's just talk. This is good risk management discussion here. So if I went from a one contract trade, okay, so today, for example, today's daily profit play. So entry is $1.05 credit, which means my risk is $3.95. All right. That's my max risk. So the most I could lose today on one contract is $395. Okay. That's the most I can risk. So am I blowing up my account by risking $395? No. It would just be an annoying loss. But what does price have to do? Something out of the ordinary. Okay. So let's say that I did lose. Okay. And then the next day I show up and I do a similar trade and I say, okay, I get an entry for $1. So we'll just say scenario is I lose $395. Okay. And then the next day I double down. Let's say I lose the second day. Well, I just doubled that risk, right? I lose $395 and then I lose $790. $790. Now, in 3 years of trading, I've never seen 3 in a row. But I don't want to be the trader that goes in that statistic and says, well, Chris said we never lose more than 3 in a row. And I triple down. So I go from 1 contract to 2 contracts to a martingale would be 4 contracts. So what would that 4 contract trade be? 395 times 4 would be a max risk of 1580. Okay. Now, if I lose 1580, clearly the market is doing stuff that it shouldn't be doing, but it doesn't take a lot to all of a sudden be in a hole that I'm not happy with. 1580 and 790 and 395. I'm down $2,800 in 3 trades. That's stupid to me. Okay. Because the flip side is, well, what if I martingale and I win? Well, I'm still not going to recover the full amount. If I lose 395 and I double down and I win, so today I won like, 35 or $40. So I win 80. Well, I win $80 and I chew into that 395 risk a little bit. I just need to keep trading. Okay. So my point is, and we can talk about this more. I mean, I might have time to go through and find it, but if here's what I remember. This is from memory, so it's not going to be like perfectly off the spreadsheet. But in a 3-year test with 0 DTE, if I went in every day that I had a loss, if I doubled my contract size, okay, I went from gaining on like a 3-year test. I went from like a 1 contract trade that made me about $24,000. Okay, so I'll write this out. This is so a 3-year daily profit play, which is the same strategy every single day, yet about 24K in gains in 3 years. Okay. If every loss that you took, if I took a loss on a Tuesday and I doubled that contract and I traded on Wednesday and I win or I lose, I did not go full martingale. I just went from 1 contract to 2 contracts. And if I lost again, I traded at 2 contracts. I stay at 2. I never got bigger than 2. Okay. I went to, in 3 years, this is all just 1 contract trades. So win or loss, I just stick with 1 contract the whole time. If I did a 3-year daily profit play, and for every losing day, I traded the next day with 2 contracts. Okay. I made $27,000. Now, here's what I think. To me, that risk isn't worth it. To make an extra $3,000 over 3 years while literally doubling my risk is not worth it. It's just not. I'd rather just stick to the contract size and the percentages that I'm comfortable with and take those trades. If I lose 395 today, I'm losing less than 1%. I'm like losing like 0.1% of my account, 0.2% of my account. It's fine. Keep trading, right? But as soon as you start taking swings every day where it's a 1% swing, a 2% swing, a 4% swing, a 5% swing, all it takes is a bad streak, right? All it takes is a bad streak, and there's just a lot of risk in these trades. And also, the reason I don't love this is because there's no backup plan. In a 0-day environment, you're either right or you're wrong. It's that simple. So if I don't have a backup plan, look, I have backup plans in waterfall income. I have backup plans in project options. I have backup plans in all the trades that I deploy that are more than like 30, 45, 60 days out. Anything in that window, I can always have a backup plan. 0 day, I don't have a backup plan. 0 day is I lose the day and I just trade the next day. So if I lose, I'm typically taking 3, 4, 5 trades to get back to break even, which is fine as long as I can just keep trading. Right. So all I'm saying is it doesn't make any sense for me to know that, yes, in 3 years, we've never had more than 2 losing trades in a row. So you can take some solace in that. You can take some confidence and know, well, that's really good. I don't lose very often. You're right. I rarely lose. Okay. But the fact that the losses are significantly bigger, the risk is significantly larger than what I'm gaining. It doesn't benefit me to just keep adding more contracts and taking on excessive amounts of risk just to chip back at the same thing. So here's what I'll do. I will do this. I'll bring this to tomorrow. Okay. We still got time today, but I'm going to run the numbers and I'll show you this. So tomorrow's daily profit play. Okay. Tomorrow's daily profit play session. I will have the numbers for 3 years of 0-day trading, and I'm going to put them in a spreadsheet. I'm going to go through and I'm going to do a true martingale. So every time we lose, we'll double. If we lose 2 in a row, we'll double again. So we'll go from a 1 contract to a 2 contract. I'll do this. I like to consider a step instead of a multiplier. So if I go 1 and I lose, 2 contracts and I lose, 3 contracts would be my step increase, right? So I go from, if I took a loss, I go from 1 contract to 2, 2 to 3, 3 to 4, 4 to 5. That's stepping my risk up, as opposed to a true martingale, which is I lose on 1, I take a trade for 2. If I lose on 2, I double down to 4. If I lose on 4, I double down to 8. I'll do both. And I'll see over the course of 3 years, is it worth it to take that much risk? Right? Is it worth it? So I'll save that for, we'll do this tomorrow. That way, give me the time to run the tests, put the spreadsheet together, and we'll make a go of it. And what you will see is, number one, we don't lose a lot in a row. So, I mean, having 2 losses in a row is very, very infrequent. In fact, for literally 3 years, I didn't have more than 2 losses in a row. So that's a good thing. But doubling down, and it's like you take 2 losses in a row and you double down, it's like you're just clawing back more. So let me outline this. So we'll do this. So daily profit play. I'll do the test. We'll go 3 years of 0 DTE, because we can go back to basically June of 2022 to present. So we're trading just over 3 years now. And I'll do my standard strategy. Okay. 1 contract for every trade. So this is what I'll test. 1 contract for every trade. And then I'll do 1 contract for every trade. And 2 contracts if there's a loss, and stay at 2 until there's a winner. And also run, this is all going to be on the spreadsheet. So I'll do 1 contract for every trade and 2 contracts if there's a second loss, 4 contracts. Well, I guess I'll do this again. For every trade, and step up 1 contract until there's a winner. So 1, 2, 3, 4, so on. And I'll do a 1 contract for every trade, and martingale, which is 2x the contract until there's a winner. So this would be 1, 2, 4, 8, 16. Now, another thing that's really important with the martingale stuff is you can definitely run out of capital, out of leverage, if you use up all your buying power. Like right now, the trade that I took today cost me $395. If I was in, 16 trades, $395 times 16 contracts, that trade is going to cost me $63.20 just in buying power to place that trade. Okay. Now, if I win, I win $35 times 16, I make $560 today. That's great. But I'm risking $6,000 to make 560 bucks. Now the probability is in my favor. The probability is always in my favor, but you got to be thinking risk. I like literally if I could see all of you in this big Zoom call and it's like the Brady Bunch where I can see all the faces, I would literally beg all of you, like, please think risk first with this strategy, because it's so easy to think, well, Chris wins a lot. This trade wins a lot. This wins a lot. It does win a lot. But if you are emotionally affected by a loss, you will never survive the strategy, because one nasty day that you over leverage and take it to too many contracts and you lose on 10 contracts, you're going to hate the strategy. You'll never think you can survive it. Because what you have to be able to do is, if you lost on 10 contracts, you got to get in there the next day and trade 10 contracts. And you got to get in there the next day and trade 10 contracts. That's the courage you have to have. So if 10 contracts seems too big, then just stick with one. And you're still going to make probably $7,000, $8,000, $10,000 on one contract. You get 250 cracks of this thing every single year. We're going to be fine. So I'll show you the numbers, right? I'll show you the numbers. I'm curious because I want to see what it does too. But I am imagining, I know the mechanics of the strategy very well. I would imagine that, yes, we're probably going to make more money if we step up, for every loser, we step up another contract, and we probably do fine. But the amount of gains we would have, it's like if I went from making, $24,000 roughly on just all one contract trades, and I literally martingale and I make like $30,000. Okay, cool. I make an extra $2,000 a year, and I'm taking an excessive amount of risk, maybe an uncomfortable amount of risk, and I don't ever want to put myself in that position. I think if you're putting yourself in that position emotionally, I don't know. It's one bad trade away from like, what did I do? Why did I do that? There's just too much regret that comes with too much risk. I mean, when you make trading a game of, if you win and lose, it feels about the same. That to me is when you've gone into the realm of I'm more of a professional trader. I'm more of I can do this for a living. I can do this full time, because it's just a trade. I still see it every single day, how emotional people can get with like a loss. Well, you shouldn't have. Look, I see all the reports. I see, Kane took a trade and he lost, and it's a huge loss. And Kane's like, it was the same 20% loss we normally take. It was completely standard for us to take that loss. But traders take such big trade sizes and they just complain. It's risk management. Okay. So anyway, I'll do the digging. I think this will be an interesting thing to share. Are we going to make dramatically more money by doubling, quadrupling our risk? Maybe. But to me, I don't think the risk is worth it. I think this is a strategy that, for me, I'm willing to allocate about 10 to 20% of my account to and keep it there, because that's 10 to 20% of my account that I could generate pretty good returns on. Okay. But I would not love to do this exclusively unless I was willing to take some pretty big swings at the market and know that my risk is going to be, pretty high at times. Because basically, if you look at my return on risk, we're getting anywhere between about 10 to 15% return. Most of our winners, about 10 to 50% return on capital. Okay. But our win rate is really high. We win, 90% of our trades. So anyway, all right. Fun little discussion. Price action for today, still very cooperative. Okay. I don't think anybody's probably still holding daily profit play, are you? Who's still holding? And if you are, what profit target are you holding to? Because you've already seen probably 30+%. If I get the trade out here, SPX filled. Right now, that same $1.05 is now trading for like 85 cents. So I've already hit my take profit. It's not any lower. So anyway, I think it's a good thing that we're out, and I would just let the day unfold. I've got a 99.5% profit probability that price will stay below my 65.50 today, which means we'd have to break all-time highs. I mean, if we have a run up into this level, that's fine, but I think that's about as high as it goes. Maybe 65.10.15 is where it's about as high as we go. Okay, Mark says aim. Mark's going big with 8 contracts and his post-birthday going after 50%. Okay, man. Mark, you've been in enough of my classes. You know the statistics. If you're going after, the average hold period if you're going after a 25% winner versus a 50% winner, big difference. You're going to have to hold that trade for a couple hours. It just means more exposure. That's all. But you got it, dude. Okay. So daily profit play. I'm excited to roll this thing out with a revamp. This indicator will be a lot of fun to have on a day-to-day basis. If you want this indicator, you got to be in my daily profit play. All my daily profit play students that are in the service right now, I'll update this indicator. I'll provide it. There's going to be the Pine editor will be in a text form, so you can just copy and paste in TradingView if you like TradingView. I'm also going to have the Tasty Trade team put it in the charts, so I can have the if you go into their charts platform here, so go into Tasty Charts. And let me go after, this is weird. Let's clear this trade out for a sec. Let's go back into charts. Interesting. There we go. Okay. So put this in on this should be the shorter time frame. Not sure where the heck all my indicators went. Layout, cuts, themes, reset margin. This doesn't look the same. I feel like something's missing right now. Drawing tools, chart type, crosshair, indicators. There we go. That's weird. So they must have just updated this over the weekend. So now there's like a little indicators, vertical axis or vertical menu. So click on indicators. It's not here yet, but they're going to call it daily profit play. Hopefully they just keep the same name, but we can find it here or search for daily profit play and it'll pop in. So that hopefully will get posted in the next week or two. But between Thinkorswim, Tasty Trade, and TradingView, we can have this indicator shared right here. Okay. All right. Yep. So it's going to be in Thinkorswim as well as Tasty Trade and TradingView. I'll put that on all. So don't ask me for E-Trade. Don't ask me for Webull or Robinhood. I'm using some pretty big platforms where I mean that's the coding that I can do. Thinkorswim, Tasty Trade, TradingView. Okay, is it too late for me to enter the daily profit play? It's not. You're not getting the same type of premium. The expected move is probably reduced. So if you go back to today, look at the number from scratch. Okay, you can do the 15 by 20, which is around a 19 delta, and do a 75 by 70. I mean, I can still get $1.15 for the trade. It's just I need price to stay calm for the next probably 30 to 60 minutes. So it's not too late, but I'm already out of the trade. So I never love the idea of like an hour later getting into the same trade. Okay, I like the idea of I want to get into the trade early in the morning, get paid in the first 60 to 90 minutes, and move on. My daily profit play is done because tomorrow's a new day, right? So I would not get in the trade today because right now it's like now that we've already hit a profit, this is exactly what we needed. We needed price to do exactly what it did, which is just stay calm. So that's an easy win. Now if price starts to go higher, all of a sudden we're getting directional flows. Well, you want price to stay centered on a daily profit play. So what happens when price goes up? All of a sudden your levels are threatened. So I don't think it's worth it. We already got the winner this morning. We can come back and stab it again tomorrow. Okay. All right, good. So now the rest of my day is going to be just kind of combing the portfolio. We've got waterfall income at 11:30 a.m. We'll be looking to throw out a trade again today. SPX daily profit play was a winner. I've got 2 broken wing butterflies with the 50 pin that should be offering a nice chunk of profit by the end of the day. I'm still looking at this. I mean, we'd have to have an all-time high today. I don't think that's going to happen. So I'm going to hang out. Double ups, I should have taken that trade on double up. The spread was weird, but double ups, I think we're going to probably tap this 65-15 zone. So I mean, going up another 15 points or so, if you can turn like a 5 wide, maybe like a 25-cent debit, turn that into like 50 cents or better. But there's two levels I'd be looking today. I think we can find maybe this like 15 to 20, so 65-15, 65-20 zone. Obviously, we can have it kind of settle in exactly where it is, or we come back to this positive negative gamma flip zone. So between around 65.15, current price around like 64.95, and down here towards 64.70, I would imagine that that's probably the levels that price is going to stay at today. I don't think we're hitting all-time highs today. Okay. Nope. We changed it back. So we switched up the profit panel sessions. So right now, my waterfall income will be back at 11:30 a.m. Eastern time. Profit panel's been moved. Profit panel's now at 2:30 p.m. So I'm back on schedule. We're 11:30 a.m. We're posting the trades by noon. We'll be back live at 11:30 for waterfall. Okay, so daily profit play. So this will be weekdays, 9 a.m. Eastern time. Waterfall income every Monday, 11:30 a.m. Eastern time. And this week also, Monday and Tuesday, 1 p.m. masterclass. That's happening this week. So I have a trading session this morning at 11:30, and then Monday, Tuesday. So today, tomorrow, we're doing a 2-day workshop on waterfall income as well. I did a webinar on Saturday. So I've got some new students in. Come on, give them a nice warm welcome. Let's get some core strategy discussed at 1 p.m., 2 p.m. Let's talk core strategy 1 and 2. We're looking to place a trade today at 11:30. Okay, double ups. We just finished a 2-day workshop last week. We did a 3-day workshop just a couple weeks ago. So there's now over 5. So over 5 master classes. Why is that? It's not over. It's 5 master classes. 5 master classes to review, which again, low risk, high reward. Get a sense of direction on the day, trade something out of the money, super small risk, potentially 5 to 1, 7 to 1, 10 to 1 reward to risk. It's a great strategy. Pinch point, I'll look at that on Wednesday for Watchlist Wednesday. We've got some hedges in for Crash Insurance Masterclass, Project Options Edge, still having a lot of good trades running. Took some bonus trades last week. GLD, I added some positions, did a couple more on Project Options last week. If you're still looking just for some overall education, I just want to learn more about options. Get my practical options. $27 is my quick guide course. You want to trade spreads, you want to trade long calls, long puts, you want to trade the market in some direction. Quick guide gives you a directional strategy with calculating your break evens, where you're right, where you're wrong. Full course is 13 strategies, 11 videos. So this includes debit spreads, credit spreads, butterfly spreads, iron condors, strangles, so neutral strategies, calendar spreads, diagonal spreads. Again, silly names, but I explained in full detail. Like, these are 13 of my favorite strategies that if I'm thinking about the markets up, down, or sideways, these are what I'm trading. So if you're ever interested in these, let me know. I have these available on a Vimeo on-demand page. Okay. All right. Tomorrow, so I'll run the stuff today. Tomorrow we'll have some fun in the daily profit morning session. I will share the numbers with you from 3+ years of 0-day trading, what the everyday strategy looks like, and if we were to step up our contract size, or we were to martingale our contract size, are we making significantly more money? Is it worth the risk? Right? Is the juice worth the squeeze? Because look, we're probably going to make more money. I'm not going to be surprised if we make more money. But here's an example. I follow a podcast. There's this guy. He runs a service it's called Spot Gamma. Basically, he identified this trading group for the Wall Street Journal, I believe, and he coined this group Captain Condor, and it is a martingale iron condor strategy where somebody is running a service or a group, and they're taking as a collective group, they're taking sometimes thousands of contracts collectively. And I mean, he's for months, he's talked about like, it gets really big. Like, we're talking like JP Morgan has like a multi-billion-dollar fund that sets like a collar trade every quarter. Well, this is a group that runs, sometimes if they get into like that 2, 4, 8, 16, 50 plus contracts, and they're doing this with a whole group, um, you have some insane liquidity at these highs and lows. And I think that one of these times, the market makers are going to run that liquidity. Instead of siding with it, they're going to run it. And I think that whole Captain Condor group is going to blow up. I think that's going to happen. I think like if you have a Jackson Hole day combined with another outlier day, and they're already doubled and tripled down, I think it's just one nasty, nasty day away from like that group will never exist again. So I just think that's not worth it. That risk isn't worth it, if you ask me. Okay. David, you got it. Yep. Is that from it's like Brett Kabucha or something like that? Let me see if this is it. Captain Condor. Is this it? 31-year-old. Continue reading. So I'm looking to see if so this guy that I'm talking about in spot gamma is like Brett. Yep, here it is. This is the guy. So this is it. Yep. So Kachuba is the guy that I follow. He's on Spot Gamma. He does a lot of podcasts on like excess returns, and he's on a couple of the podcasts. But um, anyway, I always have this fear of impending doom. So yeah, I mean, it's a gutsy strategy, you know? And I mean, I will say this. I come from the land of currency trading. And believe me, I have seen so many traders send me the robots and say, Chris, this robot's so good. I've made so much money with it. It never loses because it martingales. Fast forward into live market scenario, however many months later, however many years later, that robot gets blown up at some point. It's just not worth the risk, you know? So if you're doing it with like complete risk capital, you're like, you know what? I'm going to put on, I don't know. I don't even know what the number would be. I would say if you've got 100 grand you want to burn because it could lose it all, then do the strategy and try to make a bunch of money. But if you're going to risk 100 grand, be prepared to lose 100 grand because this strategy will blow up at some point. And that's what makes me nervous. It's one run to the highs and lows away from getting busted up. It's just way too big. So again, I'll have some fun with it. I'll run the numbers. We don't lose a lot of trades. I think over the last 3 years, the most we've taken consecutively is 2 losses in a row. So that's why it works. That's why it's been a big deal. But it's insane the type of order flows that are coming in with a group like this. So anyway, I'm gonna put this aside. That's a good article. But that was that one that was like Wall Street Journal. Kachuba was following this guy for a while because it pops up on stuff like this. I've got unusual whales. It pops up on those outlier levels. So when you get into some of the flows here, when you go into your market maker exposure, some of these levels are out there, right? Like if you have like a Captain Condor position, you're going to see it popping up here with like these large positive, negative gamma levels. And in a way, it's like they do align themselves with market makers, which is why I think it's a smart trade. But that's what we do. And I'm just trying to do it with much more, responsible risk. Okay. Yeah. Davis says, I think the service called Inside Options, 5,000 buy-in. Trust me, on sleepless nights. Yeah. And again, but that's not the point, man. Like that's what's so stupid is you can completely avoid that. Sleepless nights is because your trade risk is way too big. I mean, look, I used to run a currency fund, like $8 million, no stop losses in the currency markets that have had flash crashes. I survived, the Swiss Financial Bank and Brexit and all sorts of other wild and crazy stuff. I never had stop losses. I would trade. It's a 24-hour market, 5.5 days a week. And I survived that for 10 years. It was all because of trade size. So now I go into the world of just focus primarily equities, indexes, stocks, options, and I have an opening bell, closing bell. So I can disconnect from this market better than I've ever done in my entire career. I just focus on the day and I focus on what I can control during the day, and I'll come back and do it again tomorrow. But running 23-hour futures accounts and running 24-hour forex accounts, running 24/7 crypto accounts, that's the excess stuff. And if your trade size is not responsible, you're going to get yourself in trouble. So I just think it's funny when I hear like sleepless nights. It's like, you can control that. Don't trade that big, you know? And I know that the race might seem longer. It's more of a marathon than it is a sprint. Everyone likes to sprint to gains. Everyone likes the instant gratification, the instant money, and I need to make thousands of dollars. And you can, but it's the flip side of that, which is not every trade is guaranteed. And the risk is just not worth it. So I like the idea of, I want to preserve my capital in addition to responsibly grow it. There's a reason that some of the, like Stanley Druckenmillers and Jim Simons and Buffett's and Bill Ackman's and George Soros, like all these crazy legendary names, probably early in the career, they were one bad trade away from not knowing who they were. But at this point, they are, Stanley Druckenmiller is the guy that says, I put all my eggs in one basket and I watch that basket very closely. Jim Simon's the guy that basically maps out the market with technicals and trades millions and millions of trades and quants. There's a lot of ways to do it. But I would think all of them at the forefront would say risk management is the only way you're going to survive. So whatever, man. I can sit here and say risk management until I'm blue in the face. I know it matters to me, but at some point, if you're just like, you know what, it doesn't matter until I hurt so badly that I've got to start listening about risk management. I risk too much. Well, that's when it sucks, is you're already in the hole now. And then you're going to go smaller risk and dig yourself out with this baby little garden shovel instead of like just never digging the hole deep in the first place. That's funny. Jim Cramer, one trade away from a win. Yeah. That's why there's an inverse ETF. Yeah. David, I love that, man. In the time I've been with Daily Profit Play, I've made over $30,000. That's awesome, man. That's awesome. Yeah, we've got a lot. We've got a lot of successful traders. David at $30,000. Larry's made like probably over 100 grand. I know that Davey is in here. Dave's had some swings in his account, but Dave's made over $10,000, $20,000. But again, it's all part of the process. So I'll leave you with this to kind of wrap up today. Overall, should be a good day. We've got Broken Wing Butterflies coming in with full profit, so I should have another $2 of credit closing out today. And then the Daily Profit Play today was a winner, so the 105 closed out at 75. So that was width is 5, credit at 105, exit at 75. Okay, and then the two Broken Wings that'll close up. So that risk would be 395. That risk would be 950 on the Broken Wing. That risk would be 9. That risk would be 9. There. Okay, so the spreadsheet's updated. I've just got the two trades to close out today, 456 and 457, each for $1 each. There's a 99.5% chance of profit. They hang in there. So I don't think we're going all the way back to all-time highs. My threat level today would be all the way up here towards the 30 is closed out for a winner. So this can be deleted now. So all I have left is the 65.50. Okay. So looking good. Price action for the day. Let's kind of set the stage for this week. What is happening on Wednesday, Thursday this week? What is the news? What is the catalyst that we have this week? We don't really have major earnings. We don't have any major tariff announcements. We have inflation data. So last week was jobs that were disappointing. This week we have inflation that's expected to print higher. I'm telling you this, the headlines could be reading stagflation this week. If the market doesn't like that, we'll see this market top out and start giving us the corrections that I've been anticipating now for a while. If the market doesn't drop this week or drop into next week, I would imagine it's all about post-Fed. So I'm not calling the top right now because who knows? We could hit all-time highs again this week and it runs CPI. It's like, we're going to go higher. We got to outpace inflation. Let's have equities and assets go higher. So it does, right? Don't call this top. But what I'm telling you is the market will care if it's below this low at 63.60 or below this low at 63.40. Then all of a sudden price action starts to matter and the bears are in a little bit more control. They can find our pullback level, find a pullback level. And then with waterfall income, we just trade. Double ups, we trade. Daily profit, we trade. We grind. Okay. We grinded through this. We came out ahead. If we have another pullback, we grind through the pullback, we come out ahead. Our job is to trade. Okay. All right. Good stuff. Okay, I'll let you go. We'll wrap up here. So nice winner on daily profit late today. 2 more to hopefully lock in by the end of the day, as long as price stays below 65.50, which I'm pretty confident we're going to. I'm also not opposed to adding another trade in for daily profit late today. Not an iron condor. I'm probably just going to hold off and see, do we get like a 2025? If I could sell, I mean, this is kind of the nice thing is based on my VIX today, if I can sell something near these tops, I'm probably going to take that trade too. So I'm looking at my levels here. There's a pretty big level here right around 65.20. So if we get to this level, if we get to 65.20, okay, I mean that's a pretty good spot to hit. That's a good target to achieve. Question now is, do we sit there and stay there, or do we get there and then fall back down and we finish right around the day? Remember, today's open was about a plus or minus 20. Plus or minus 20. So if we open up, I mean, previous day around 64.80, we're already up to 05. So we've already exceeded that from the previous day's close. From the open, plus or minus 20, that gets us up to around 65.20 on the upside. We'll see if we exceed that for the close or not. So if I can get a decent premium, I'll try to sell, up into the 30s. Maybe I can get a trade that fills me there. But that's a maybe. I'm probably not going to take that trade unless I really, really like it. Okay. All right. Good stuff, everybody. Thanks for being with me today. Just to recap on the schedule, Waterfall Income, we have a trading session at 11:30, which is coming up here in a little bit. And then also running a 2-day workshop in Waterfall Income, 1 p.m. today and 1 p.m. tomorrow for masterclass. Okay. Double ups. If you're new to double ups, make sure you check out that day 1, day 2 last week and go back and watch, the previous 3-day workshop. Pinch Point will share the trades on Wednesday. I'll try to find some trades this week. Crash insurance, we're hedged out. We have some good trades in. Project Options Edge, we took some trades last week. Newsbreakers, we have a big blackout window coming on the 15th where there's no more buybacks for a little bit until earnings kicks up again. So we're going to have a little lull here, probably going into the next maybe month when all of a sudden earnings starts to heat up. Mag 7 earnings, when you're getting 500 plus companies a week reporting earnings, then we'll speed things back up with newsbreakers. Okay. But positive gamma, again, alive and well, just melting up higher. So good stuff. Glad we took some winners today. And I will see you this afternoon for Waterfall Income. I'll be back on this afternoon also for my final hour session. And then tomorrow we'll have some fun talking about this martingale. Let's do the numbers on a Captain Condor type experience. Okay. I think it's a terrible strategy because it's one bad trade away from blowing up, as the trader admits. But, so far it's working. So anyway, all right. Talk to y'all soon. Thanks. Bye.